Hey everyone, it's Kenton Becker, American Pacific Mortgage. I'm here again with another weekly video tip for you. This week's tip, I want to talk specifically about non-traditional programs. Now you might be thinking, what are non-traditional programs? Well, it's anything outside of the standard financing box. You know, your standard programs like Fannie Mae, Freddie Mac, conventional loans, FHA loans, anything that's outside of that traditional financing box. Now, generally non-traditional programs are mostly surrounding income because sometimes clients have different forms of income. They might have self-employed income. They might have alternative forms of income, maybe 1099 income. Maybe they're doing special jobs working for a business or their business that they own, or even self-employed businesses like Uber, drivers, lots of different things out there for alternative income. Also, sometimes the alternative income can be in the form of asset programs, so like bank statement options, utilizing 401k or other assets. And then we even see income in the form of rental income if a borrower has a lot of investment properties and if they want to use that rental income as a form of income. The other side of it that I have helped a number of clients on, and I think I've even talked about on this channel, is utilizing actual income from the property you're buying, such as accessory dwelling units, or even buying a duplex, triplex, or fourplex to utilize the rental income on those. Now we have several programs that will work for all of these. A lot of times it takes a qualified loan officer to look at self-employed income and calculate the correct income using not only business tax returns, but also personal tax returns as well. There's also some revisions to the guidelines on special conventional loans that will allow us to utilize 1099 income from this year. So your year-to-date income, especially if you're like a driver for Uber or Lyft or any of these rideshare companies, a lot of times the income that you have year-to-date on that 1099 is going to be a lot higher than what you would file on your tax returns. And there's some new revisions to the guidelines that will actually let us calculate that income from year to date rather than going back to previous tax returns and having to use your net income. That can add a lot more income to your numbers and maybe allow you to qualify for more home. I've also helped a number of clients utilizing asset programs, like looking at their bank statements, assets like 401k, retirement funds, different accounts like that, mutual funds, IRAs, and actually calculating those investments and showing an income based on the assets that they have in those investments. Now there's standard guidelines through Fannie Mae conventional financing that will allow us to take the total value of that asset, divide by a certain number of years and a certain percentage, and we can use that as a form of income. And even talking about the income part of it, even utilizing things like pension and fixed income can sometimes be a little bit above the standard loan officer's experience. And what I have found is that many loan officers forget that they can take fixed income like Social Security, retirement, disability income, and they can actually add a certain percentage onto that income. It's called grossing up the income. The reason they allow you to do that is because a lot of these fixed incomes have a scheduled increase that they're going to see. So if you receive Social Security, you're going to receive an increase over a certain number of years. Same with disability, same with other retirements. So the lender will allow you to gross up that income, showing those scheduled increases. And that can sometimes be the difference of somebody qualifying for a $300,000 home versus a $350,000 home. On the same line of non-traditional products, something that we have talked about recently is manufactured homes in a park. And we are seeing a lot of popularity in these, especially recently. Because everyone's looking for the affordable homes out there, a lot of times the best way to find an affordable home product is to look for manufactured homes that are in a park or community. Generally, to get a payment under $2,000 a month, you're going to have to look for a manufactured home in a park or community. Now, you do have to take in mind the space rents that are going to come with buying a home in a park. So just because you're buying a home for, let's say, $125,000 or $150,000 doesn't mean you're always going to have the monthly payment that would be associated with a regular single family home at $150,000. After you factor in the space rents, you could find yourself at close to a $2,000 monthly payment, even on a $150,000 manufactured home in a park. But if you're trying to keep your payment under $2,000 a month, this is probably going to be the best way to do it. And then finally, jumbo loans. A lot of jumbo loans are going to fit into your non-traditional type product. The reason why is because we're using a lot of different investors. There's a lot of different guidelines out there. There's different requirements for 10% down, 20% down, different credit score requirements that are out there, and really the options are almost endless. So if you are looking at homes that are valued well over $1 million, you are most likely going to be into a jumbo loan, and it's going to fall into more of a non-traditional credit. The good news is myself and our team at American Pacific Mortgage, we are well versed in all of these different programs. I myself have done all the programs that I'm talking about here with asset income, using rental income, manufactured homes and parks. So if you do have any questions or if there's anything I can help with, feel free to reach out to me. My contact information is below, and I'd be happy to help take a look at some of these non-traditional products to see if they're a good fit for you. Hopefully this video helped you. If you think of somebody that you could share this video with, go ahead and share it with them. Thanks so much for joining me. Have a great week.